Kidding.
Good morning, everybody, and welcome to another Mortgage Coach Friday Mastermind. I actually don't know what number this is, but I'm pretty sure it's north of 270 times we've done this, and I think this might be the first time where we're gonna flip the script. I opened it, but I think it's a really good time to talk about what's the playbook for loan officers that want to get referrals from financial advisors. And that is something that I've been doing for a couple decades. You know, that there's a whole backstory. When I founded Mortgage Coach, it came from the fact that was my primary referral source as an originator. And so I'm gonna hand it off to Todd and Deborah, and I'm gonna be the special guest today. If you're new to the business, I'm Dave Savage, CEO of Mortgage Coach, and I'll let Todd run the call from here. What's up, Todd?
Hey, not much. I am so excited to get to play host and interview you. But before I do that, let's say hello to Deborah Bird, my co-host today. Good morning, Deborah.
Good morning. Happy Friday, everybody. Let's go. I'm excited.
Oh yeah. So let me set the stage.
Hold on, Todd. Where are you? Because your background's way different. You got to tell us where you're at.
You know, I am at, we've had Kevin Kaufman on a number of times, who's a realtor. He was most recently on when you and Dave interviewed him about how to conduct a mastermind. And this is his podcast room. I'm actually at his office today. I was going
to say, yeah, I remember.
I was going to have him stop by and say hello, but he's recording podcasts off campus somewhere. I'm not quite sure where he's at, but he's given me access to his office, which is right near my house. So I'm going to probably be here a little more often. You kind of see, I have to kind of get better lighting. His light's over here, but that's okay. You know, we'll get it set up, but I got like this Corella DeVille thing if I sit in the middle. So I think I'm just going to sit right over here and get us rocking and rolling. A lot of you know my story. When I got into business in 2001, my first day of the business, I showed up. They said, hey, we're going straight to this seminar. I'd never talked to a borrower, never done anything. And at the seminar that I went to, I bought Mortgage Coach. I had never actually done a loan, but someone got up there and talked about how he used Mortgage Coach to get and attract CPAs and financial planners as his referral sources. And I thought, as a guy who didn't know any real estate agents, as a guy who had just got my MBA and thought I was smarter than I really am, realized that would be a great niche to go out there. And sure enough, as I unpacked Mortgage Coach, so to speak, because back then you actually got it on a disc, I read all about Dave. And Dave, I don't think a lot of you know this about Dave, but Dave is the OG of working with CPAs and financial advisors. He was the first person back in like 1995 to get on stage and talk about how he built almost $1 million of revenue that year from solely going after CPAs and financial advisors. And ultimately, that's what birthed Mortgage Coach. So ironically, you're all here because Dave was so successful that he needed a tool to differentiate himself. And so I'm just so excited for Dave to kind of unpack, his story. I know we're going to be talking about some of the resources later in the call, but one of the things when you talk about it, you talk about why it's important, kind of the mindset you have to have, Dave. So do you mind unpacking that?
Yeah, no doubt. And I do want to make this a mastermind, guys. So if you have questions, put them down below. I've got some notes. Also, I've got a book that I wrote many, many years ago called The Art of Referral, which has been read tens of thousands of times because I've got it on a lot of different social media places. And I'm going to reference about 2 or 3 books that I wrote, pre-meltdown, the Mortgage Planner Handbook. I also put those in our group, but as Todd said, I came from a CPA and financial planning family. My dad was a CPA, my grandpa was a CPA. They were all MBAs, graduated from University of Denver, DU. And I was the ADD dyslexic kid. So, just getting through school was an extreme struggle for me. Now, I always did good with numbers. I was about 4 grade levels ahead of my age on math, and I was about 4 grade levels below my age level in reading. But when I took cost accounting, I'm like, I'm out. Like accounting 101 and 102, we're like, hey, this is kind of cool. Maybe I'll be a CPA like my dad. And but when I went through that, I'm like, no, I'm not. That's my brain is not. It's not possible. I'm too ADD to do that. But I fell into the mortgage business. That's a whole long story. But it's funny coming from that backstory of a family that's big with numbers, having a natural gift around numbers. And then my first mentor, Mel Samick, who recruited me, I was working at Smart and Final, working graveyard shift, going to school, and the whole story on how I met Mel and got in the mortgage business. But let's just say my first day on the job, and this will date me a little bit, he gave me the yellow pages and he opened it up to C's for CPAs, and here was my script. Dave, call everybody, everybody on this yellow page, and they were all CPAs, and I'd go, hi, my name's Dave Savage. I'm with Excalibur Mortgage. We specialize in helping CPAs and their clients with their real estate financing needs. Do you ever have clients that ask you about mortgages or real estate financing? Pause. And when I'd get a hot one, someone is like, yeah, and talk, no, help. Well, guys, I think I made about $14,000 a year as doing slave labor, working graveyard at Smart and Final. And I think I made over 10,000 commissions on my third month in the mortgage business. So it was like, boom. So it was just a perfect storm that I built that mortgage practice. And then when I, invented Mortgage Coach, I was solving for the fact that I had gone through a bunch of different value props. And I wanted to be able to remember, I was young then, this is many years ago, 30 years ago. So I looked super young. I grew up in the punk rock scene in Huntington Beach. So I had spiky hair. I didn't have any piercings. But I was a jock, but I grew up in that scene, and I was just looking for credibility. Like when I went into a CPA's room and met with them, I wanted to be able to say my advice makes a difference, and then be able to prove that in a matter of 5 minutes. And so that's what Mortgage Coach solved for. So that's a little bit about the backstory. Todd, where would you want to unpack that, or do you want me to get into the why I think it's important in today's market?
Let me just ask a couple of quick questions on it, because you said it in the opening of the Art of Referrals that it's a mindset. So, obviously going from working at the graveyard at Smart and Final to be handed a phone book and having to sit there and dial. I mean, that's hard. I mean, what was that? Were you dialing for 8 hours a day? Were you dialing just for an hour a day, 2 hours a day? Like, what did that look like?
I don't totally remember, but I'm pretty sure 100 calls was a light day. And I know that I had days where I, made over 200 calls. So I don't remember how many hours, because I was still going to college and I still was going to Smart and Final. But I guess I'd make the point that I built a $1 million practice, became one of the top 50 loan officers in America, all on CPAs and financial planners. And in the book, Art of Referral, I think, and I was always a database nerd. Like I was an OG CRMer, and it had different categories for every CPA and financial planner. I had a category for people that met with me and told me they would refer me business. And then when they actually gave me a referral, they went to another category. And then when it closed, okay, they referred me business, it closed, they went to another category. And people that I closed 6 loans a year with were in another category. So I had like a lot of categories, and I think I had 793 CPAs and financial planners that had referred me business. And so I guess I say that is that with Yellow Pages, cold calling, I hadn't completely invented Mortgage Coach. I did invent Mortgage Coach within that period of time. I killed it with CPAs and financial planners. So I want to make the point that in today's market, you don't have to cold call on the phone. You've got Mortgage Coach, you've got Sales Boomerang, you've got HomeBot, you have this platform called Mortgage Coach with all these scripts and loan officers. And now there are thousands of loan officers that have a lot of CPAs and financial planners. And so I just make the point that it's never been easier to win with this particular pillar of referral business.
I just want to piggyback on that right there, because I speak to a lot of loan officers every day who get really nervous at how do you approach a CPA or a financial advisor. And so it just puts in perspective, here you were doing this however many years ago. Mortgage Coach wasn't even a tool yet. And I would think, talk about mindset, when you're making that first call, there were probably like Dave, Caliber Mortgage, who I'm sure it was pretty foreign for a loan officer to ever call on a CPA or financial advisor.
Yeah, it was a total blue ocean. I mean, yeah. I don't think it had ever happened. Like, I don't think that was
right.
So
you were like kind of trying to get Mel in here. For the loan officers listening right now, I want you to know, not only do you have, a playbook and scripts to follow, and you can go back and look at other calls that we've done on Mortgage Coach, but you also have Mortgage Coach as a tool that I'm sure you're unpacked. But imagine if you didn't have that in your tool belt and you're going out in front line, calling people, and they're like, loan officer, so I just think that that's pretty powerful, just from a perspective standpoint, that some of the excuses we build in our head to get nervous before we make a call, just rip them off and just make those 100 calls.
Yeah, there's no doubt. Now Mel was a mortgage nerd. I became a mortgage nerd pretty fast. So a lot of what I did with Mortgage Coach, I was doing with an HP 12C and a yellow piece of paper. And then as computers and laptops became a thing, I was using Excel. So, I figured out how to have a more sophisticated conversation pretty quick. But to your point, it was just cold calling. And I think in today's market though, one, the idea of having a loan officer as a referral partner for a CPA or financial planner, that's not a new idea anymore. I think most CPAs or financial planners, they kind of have their go-to mortgage guy or girl. And now it's not as competitive as real estate. So they're not, getting called as much as real estate agents are, but you need to be more sophisticated in today's market.
When you said 100 calls was a light day, I actually said, damn, out loud, like did someone like me, but that's one of the biggest things.
That was brand new. That was when I was brand new.
Yeah, but still but that's what it takes, right? I always love hearing those stories of people working hard. And so, kind of transition over to the why piece, because I think that's a hard part. I always tell people, you already said it, you transition pretty quick into being really into mortgages as a tool to help people, that you can make a difference in their lives. And I always say it has to come from here, right? It's got to come from, internally. You really have to, want to do this. So kind of talk about then how that you kind of got dragged that direction a little further.
Well, let's just flash forward to today, guys, and I'm going to share a couple whys that, one, real estate agents are the alpha referral source. They get called on the most. It's the reddest ocean. Their influence and power with all consumers is less. Now, the best agents, they still have a tremendous amount of influence. So I in no way want to say they don't, but let's just say it's a referral source that's diluting with influence. They're getting disrupted in many ways. And so, and then I would say in today's market, now that you have these tools, Mortgage Coach, HomeBot, Sales Boomerang, like being the captain of the wealth team and building out referral partners beyond just real estate agents, CPAs, financial planners, attorneys, insurance agents, it is a strategy whose time has come. Where, when I said from stage that loan officers that use technology are gonna, technology isn't gonna, take loan officers out, but loan officers that use technology are absolutely going to take market share from those who don't. I think the same thing is true with strategy. To have a diversified strategy of CPAs, financial planners, to be very sophisticated with how you manage your past customer database, you're going to take market share from loan officers who don't. So I just think it's a strategy that's now, it's essential. It is essential that you become a captain of the wealth team, or you are going to lose market share and you are going to be making your job harder than it needs to be. So first of all, I just say that. Todd, what do you think are some of the whys that this channel is more important than ever?
Well, I think we've been talking about a lot about this whole idea of financial literacy. And I think that, after being in the business, myself for over 20 years, the thing that I realize is that the people who took the good advice I gave, whether it was 5 years ago, 10 years ago, or even 20 years ago, are financially better off because I helped them make an educated decision. And so I just love the whole idea of helping people grow wealth through home ownership, because we all know the statistics, right? That most people have over 80% of their wealth in their home equity at retirement. And that's great, but we also know there's a better way, right? We've got a tool to show them how that works. We've got a tool to show them how you can do debt consolidation. And even though you might take a higher rate on your mortgage, how you can pay off your house faster if that's your goal, but then we can actually go further and show them how they can take that money out and invest. So I feel like we've got a community here where maybe not 100% of you, but most of you probably have that same why or some version of it. And so I think that that's really a great thing for all of you to think about as you're watching the rest of this call.
So I'm going to tell you why I think the biggest reason is that you do it. And I actually heard a presentation a while ago from the CEO of Rocket, and he was presenting to his staff, and he was saying, what is the biggest line item, the biggest cost that we have here? And the guesses were marketing, technology, loan officer comp, rent, brick and mortar. No. The biggest cost are loans that we could have closed. like lost loans. And here's the deal, guys. I think that is true for every loan officer in America. That not only, and let's just list all the ways that you lose loans. You lose loans because you didn't convert them at the point of sale. Now, you do lose loans because they don't qualify. So those were not possible loans. But you know what? In your past customer database, if you run your database and you do the lost loan report at Sales Boomerang, they'll tell you how many loans you lost. And on average, loan officers are losing over 90% of their loans. Even the best loan officers in America, those clients are doing their loan with someone else. And then let's talk about all the families that if you did a move up analysis and they actually knew that, hey, you could buy this house, you could sell this house, you could take your equity and you could either recash your payment and get a lower payment. There's a lot of lost loans because they didn't get a move up analysis. There's a lot of renters that because you didn't do a rent versus own, you lost them. Guys, there are so many loans that you are losing every day because you're not using the right platforms, you're not having the right conversations, that it's insane. And the way that you can stop losing loans is, first of all, diversify your referral partners, CPAs, financial planners. And then that gets to the whole mindset. When you look at the book, and I highly recommend you guys check out this book. I'm going to show it on my screen. It is at the top of the Mortgage Coach Facebook group. It's called The Art of Referral. Again, I don't even know what year I wrote this. I mean, it was this
2007.
2007. No, but it was before that. Like this is a repackaged version. I mean, it might have been 2003 when I wrote this book. But it starts with have the $1 million mindset. And I called it the Trusted Advisor Edge. And guys, today I would say it's the Mortgage Coach mindset. It's like when I walked into a room. Now, again, I had written this several years after I had been in the business, but I got to a point where I went from begging for business to where is the wrong report. Hang on, let me go back to this one. And Deb, if you could put a link to it somewhere, hang on. So if you scroll down and you get to mindset, I literally got to a point, if you read this little part right here, what is the mindset? I got to a point where I was qualifying them. I knew that if they didn't refer their clients to me, that they were losing. Their clients were losing, they were losing, because I was such a great advisor. I had built this total cost analysis, I had built this platform, and I truly believed in my heart of my heart that anybody that didn't use me, didn't refer to me, that consumer was missing out. And if you're a CPA or financial planner, you were missing out if you didn't refer to me. So that getting to that mindset is by far the most important thing.
Well, and I think that's, and we've got some stuff. If you actually go to the file section, it's been a long time, but we did your mortgage coach why. So we've got a tool for that, and you could probably look that up in the YouTube channel as well, and you'll see 250 plus episodes ago, Dave and I talking about that, which was really, really key. And so I think, Dave, as we, unless there's anything else you want to say on why, let's sort of talk about the how, right? I think that's the number one thing is you already kind of gave your initial script, which is literally, pick up the phone and call them, but you want to dig a little bit more into how to, get that first initial call done and how to get the meeting.
Yeah, well, first of all, let's just say there's 3 key steps to the how. First of all, you got to get the meeting so that you're even up to bat. You got to crush it in the meeting. And then you need systems and processes and messages so that they remember you and they refer business to you. And I'll bet you a lot of people who are listening to this call, you've got CPAs and financial planners that have either referred you once or they've talked to you and they said, I'll refer you some business. And so many people leave that third base. You never go home. Like we're playing baseball. First base is great. Second base is great. But if we can't get home, like that third base, we can't get to third base, we never get a home run. So that I'd say is just as important, and we'll just give you some high level ideas. So, I mean, I think getting meetings is pretty easy nowadays. You don't have to use the yellow pages. You can Google whatever city you live in. And let's just focus on CPAs and financial planners. Well, there's life insurance agents, there's different categories of attorneys, but let's just focus on CPAs and financial planners. Put in CPA in your city and you're going to get a whole bunch of them. There's no doubt the single best way is to be referred to one by someone, could be an active client, the whole concept of page 5, where it's that extra page of the 1003. Hey, who's your CPA? On a scale of 1 to 10, how would you rate them? Oh, they're a 9. Hey, would you mind introducing them to me? Oh, they're a 5. Oh, would you like me to introduce you to someone else? So, make that part of your conversation, and then have warm calls with financial planners and CPAs. And if you're brand new in the business, when you're calling the people that you would invite to your wedding, and you're telling them, oh, you own a home? Let me practice my move up analysis on you. And then when you're wrapping up the call, just go, hey, the most important referral partners to me are realtors, financial planners, and CPAs. Anybody you can refer them to me. So a warm call is the best way to get it, whether you're new, whether you've been doing it. But I would just tell everybody, there's no excuses. I mean, you can Google it and you could crush it with this particular strategy. So that's the list. I mean, the script is pretty straightforward. I mean, I really don't want to overcomplicate this. The script that I had, 20 plus years ago still works today. And then the only other thing I would say is, be tailored. Obviously, use the triangle of trust that was referred to you by a CPA financial planner. Try to make it so it's not I want to meet with you to sell you. I want to meet you to service people. Oh, such and such told me to call you, said you were one of the best CPAs in the market, and I've got some ideas that will help you, help your clients make better mortgage decisions and help your clients build wealth with real estate. If you're talking to a financial planner, you always want to talk about, I'm going to make your clients better investors with you. Let me show you how. I want to show you a cash versus mortgage analysis, and I want to show you how any client that gets a mortgage could actually be a better investor with you. So, you got a few minutes to talk. So I don't want to overcomplicate it. Anything you want to add to that, Todd?
I mean, I know people are already thinking, oh gosh, tax season is already here. I shouldn't be calling them right now. Any advice on that?
No, it's the best time. I mean, one of the reasons why I had some financial planners. I think my best one was about, I don't know if it was 20 deals a year, but it was 10 to 15 closed loans a year was my best financial planner. But I had a lot of CPAs that, I closed over 10 transactions a year because they're so process driven, and during tax time, they're seeing every single one of their customers. And I had a mortgage review form, like it was a piece of paper. We used fax back in the day. So it was a piece of paper, write their name, write their contact information, write their rate, write their loan amount, and I'll do a mortgage review. So tax time is a great time for CPAs to be, doing liability optimization, mortgage reviews. And so, getting CPAs to add that to their process was pure gold for me, and I think I spoke to that in the Art of Referral. I think I described that process. So CPAs were great, and again, just be, acknowledge that it's a busy time for them, and maybe email is the way that, hey, I know you're busy, but blank, blank, and blank. So I would reach out to everyone, and CPAs are pure gold during tax time.
So Dave, this may be a dumb question, but I would ask this if I was a loan officer listening. What is the how-to on pending the CPA or the financial planner? How do you teach them at different points of when they could sell you? Like maybe it's a CPA and they're looking at what's the total interest paid with the mortgage. But, for some people maybe who aren't as savvy with what all CPAs can do, or maybe even financial planners, where do you start? What is that education process, and how did you stay in front of them? Educating them.
So I'm going to answer that question in 2 chapters. I'm going to do one because that was really my strategy to win when I met one.
Okay.
And then, and so I was always very problem solution oriented and always story oriented. So I would come into that CPA or that financial planner with some stories in my bag. I had like a leather binder from Hartman. It was like a $200 beautiful leather binder back in the day. And I had it with stories and strategies. Today, it would be on an iPad, or it would be on my laptop, and it would be on my mobile phone. I would have stories and strategies. And I in my binder back in the day, I always had some sample fee worksheets. So I would like start with, well, hey, this is what your client's getting, and I'd show them a fee worksheet. If I was doing it today, I would have a PDF of a fee worksheet, or I'd have some slides with 2 or 3 fee worksheets, including some of the biggest household name lenders in America, saying that, hey, this is how people get into debt. They get this PDF fee worksheet. So there's a little contrast. And then I would tell a story. Let me tell you, let's assume it was a financial planner. I had a client recently that was buying a house, and they were debating on how much of a down payment to make. And they were debating on how much of their investments with their financial planners they needed to liquidate. They needed to cash in on. And so it was referred by another financial planner. And sometimes I would name drop, it was, Jim Bird, Todd Bookspan, some household, someone that's always one of the top CPAs or financial planners in the Orange County Business Journal. I would do a little name dropping, but that was after I was pretty big time in this strategy. And then I would say, well, let me show you what I did. And then I would, back in the day, it was a piece of paper, a printed total cost analysis that I would show them and walk them through. I do think today, like, I love what Denise did with that realtor meeting video that she had, where she had paper and she has digital. So I still think having some paper would make some sense, and having a digital would make some sense, but it would just be telling them a story about a consumer that was relevant to them, and then showing them a total cost analysis, just 1 minute on status quo fee worksheet, and 3 to 5 minutes on a story or a strategy with a mortgage coach, piece of paper or on an iPad. And it was always a wow. And then I would kind of case by case do their own situation. Hey, like, when's the last time you got a loan? And I would, walk them through, would you have liked to got this? Or would you like to got this? And never once had them go, I want the piece of paper with one option. They always were like, oh my God, I'm pissed that my loan officer didn't do this for me. So guys, it's a 5 to 15 minute wow conversation. And I'd always have 3 stories and strategies coming into it. And I'd always tell at least 1 or 2 stories and strategies within the meeting. And then, to your point, Deborah, that's the follow-up, like, how do you teach them how to do it? Every month it would be another story or strategy. And then I would just, ask them, do you have any clients that you think would benefit from an analysis like this, or a case study like this, or call it whatever you want, guys. And that was the follow-up. And through that process, they were trained on when and how to refer me.
Now, did you ever do the one-to-many? And I know back then there wasn't social media and the internet was there, but did you ever have like mastermind classes where you got a whole bunch of CPAs in a class? Do you think?
No, I did. There were some like LaTip, and there were some Chamber of Commerce things back in the day. And my big one-to-many strategy back in the day is I had a number of CPAs and financial planners that would write a letter. And I actually looked for them before this call. I'm sure I'll be able to find some. So guys, keep an eye in the community for some of the sample letters that they would write, and then they would send it to their database. So it was that was my one-to-many, was getting a CPA or financial planner to actually do a direct letter to their databases. And I was successful at that, a dozen times. And then email came along. So, I did still do mortgages when email was a big deal. And they would send out emails, but my days as a producer were pre-Zoom and webinars. They were all kind of email and stuff. But today, the one-to-many is social media, and I'm sure you can. Well, you already do that. You already do a lot of fiscal literacy content, a lot of case study content. That
was going to be my next question. If you had to think of a piece, like, I love what you said about creating the letter that you then equipped them that they could send to their database. What would be your top 2 TCAs that if we made some great educational content out of, that a CPA could take and possibly share with their database? Does anything come to mind?
Yeah, well, first of all, the move up analysis, because there's just so much equity, like so many people. I remember I said you're losing lots of loans because there's people that if they knew what it looked like to move up for them based on their situation, they'd be moving up. And so you're losing, thousands of loans. And every loan officer's, if you've got 1,000 people in your database, you're losing at least 50 loans a year because people don't know about move up. You've got, with CPAs and financial planners, they have kids. So rent versus own. Cash out refis, like the single refi, the single mom refi analysis. I would just be telling stories of a family that was able to consolidate some debt, take some cash out for home improvements, and either pay off their house 10 years earlier or take that money and invest it with their financial planner. And always when I met with financial planners, I was doing the reinvestment. Hey, what if they refinanced and took that $300 and invested it with you? Because that was like my whole value prop. Because remember, I had over 700 advisors. So my relationship was not built upon, I'll give you business. My business was built on the fact that 1, they'll be a better client of yours. And 2, because I have all these systems, because I use technology, they're actually going to refer you more business because I am getting more referrals. So, they just from that conversation and all the processes that I had and all the systems that they had, it's like, it was like, do you want them to, by the way, this will date me, but in the early days, the sports pages was how people found lenders. Like in the sports pages, newspaper, for some of you guys don't know what that is. And there would just be a bunch of mortgage ads on the sports page. And I would walk in with fee worksheet and sports page and say, hey, this is how your families are getting loans. In today's market, I would talk about social media. Like, do you want people getting their loans, off of Facebook and Instagram and social media, or do you want them getting a loan from your referral partner who's a mortgage coach, who's a mortgage advisor?
So Todd, I don't know if many people know you're the badass that you are too, and the production that your team has done for years and years. Is there anything you would add to that from being kind of a practitioner in it today and what you guys are doing, whether it's one-to-many or the how when you're going after CPAs and financial advisors?
Well, like I said, I think it's a great question. And it was definitely originally part of my business when I produce, and, then the financial crisis hit, and, it was a little more difficult to get an appointment or want to do it. And it's funny now that I think about it, I realize that's probably when I should have dug in with those, but that was really my transition into more of a realtor focused business. But for me, it was always around the annual mortgage review. And so when I talked to financial advisors back then, and I still talk to them today, ironically, literally 30 minutes when I get done here, I'm going across the street and meeting with a financial advisor who's going to refer business to our team. And so it's all, to me, again, it's something that my team still practices, that we still believe in. And I think that, those of you who, I still, Dave already said it, the alpha is the realtor, but it's a whole lot more wide open space, blue ocean, as Dave called it, in this area. And so I think you have to have a diversified bench. I think Dave is, he's a little bit of a outlier who only had those, but think about that. How good would your business be if you weren't getting calls on Friday night at 8:00 to pre-qualify a client right then, where you're never going to get an urgent call from a CPA or financial advisor? They've always got time and what's going on. So there's definitely an opportunity there. I would ask Dave, let's go back to the meetings for just one sec. Do you feel like now, because of all the health situation and that Zoom is such a big thing, that there's an opportunity for quote busy CPAs who don't want to meet with you to say, hey, will you mind jumping on Zoom with me for 5 minutes?
Without question, and I would really urge anybody who hasn't watched Shayla Gifford's Realtor Playbook from about 3 weeks ago, go listen to that. First of all, it is critical in today's market, but she's got some great scripting, and she was pushing people that, hey, you need to get out and meet people. But her scripting was basically, hey, you want to meet in person or jump on Zoom? So I would be personally, I'm a big time leverage guy. So I would probably be trying to push people into Zoom for the first meeting, because, I wanted to, and I mean this with all sincerity, guys, I was qualifying these CPAs. Like once I had done this for 3 to 6 months, I was qualified to see if I vibed with them, if I wanted to work with them. And I was busy enough that I could do that. I got there within 6 months to a year. And so if I would have had Zoom back in the day, I would have only done Zoom meetings for the first meeting. Because one, it's a lower barrier for them. So it's probably a little less friction and easier to get them on it. And then two, I can, see how cool they are and how much they connected with my ideas and decide if I want to really invest in lunch, dinner, going to their office. So I would not discourage Zoom at all for these meetings. And I do think in today's world, you could have a complete Zoom relationship with a CPA or financial planner. But there's nothing like the human connection. When you really find a baller who's got a big, whether it's a CPA or a financial planner, they got a lot of influence, they got a lot of customers, and they like you and you like them, and they get your advice. Become friends with these people, and that does take getting in person with folks.
So
Yeah, I
Dave, does that
totally
mean
agree.
when they would refer you someone, did you also own who you sent that lead to for the real estate agent? I mean, were you basically
I had realtor relationships. And by the way, all of my realtors I was in control. The late and great Ron Quintero was one of Orange County's #1 realtors, and he always tells the story. The way I met Ron was he was literally, I don't know if he was #1, he was one of the top 3 realtors in South Orange County. And I called him and he couldn't believe it. And I said, hey, I have a space opened up for realtors, and I only work, and I don't remember if it was 5 or 6, and that I want to refer business to you, and I would really like to meet with you and talk about it. So I had a steady stream of handoffs and referrals to realtors. And I had enough realtors to handle my referral business. Now, remember, guys, it's the Mortgage Coach community. I'm telling a little bit about my story, but I want to remind you, we've got this badass YouTube page, and Todd and I recently interviewed a couple ballers, Josh Metal and Craig Strent, on how they're doing it. I've interviewed Wally Ilberry many a times. Jeremy and Denise talk about how to be a financial advisor. Todd Bellinger. I mean, the list goes on. So we've got a whole playlist for anyone that wants to drill on this. Like, this is my story. These are tactics that worked for me back then, but these are also tactics that I've gotten from interviews. I interview top loan officers every quarter that are getting a lot of business from CPAs and financial planners, and I'm integrating that into the content here.
All right. So let me ask a question. So when you called Ron Quintero, did you tell him how many, like, hey, I can refer you business because I work with 793 financial advisors, or was it not quite like that brash?
Yeah, I don't remember, quite frankly, but that's not my style, so I doubt if I bragged that hard on it and, did that big of a baller game, but I do remember I had 2 things back in the day. I had an info fax, which was, just an update. I started dripping on him with my info fax. And so all you loan officers that have financial literacy content, if you're not using Plug and Play SM as your financial literacy content, check it out. But I would start intentionally showing them that I'm different and providing tangible value. I would start giving them my monthly case study, and then I'd call them. But I don't remember how I played it with Ron back in the day, because remember, I didn't have that many real estate partners because that wasn't my main source. But by the way, I got a lot of past customer business too. So I mean, my main referral partners were past customers, CPAs and financial planners, and I did get quite a bit of real estate business. I just didn't have a lot of realtors that I worked with.
So I love that. I love the whole idea of a monthly case study. So you talked about how you wanted to drip on them afterwards. So what would be your recommendation to stay engaged with them and add value? So you already said stories of success, your monthly case study. What do you think? What's the delivery method for that today? Because obviously InfoFax isn't going to work.
No. Today it's real straightforward, guys. There would be some really, and it would be multi-channel, email, text, social. I would totally know all of my CPAs and financial planners what their preferred channels were. There's not a lot of CPAs and financial planners on Instagram, but there are some, and they're badass and they're awesome. And I would know all of those in my market. So every badass realtor on any social media channel would be in my database, and I would know what their preferred social channel was. I would definitely have text for all of them, and I would have emails for all of them. I think email would probably be the primary distribution of that, but I would be texting them, hey, did you see that case study? You know, so I'm kind of like using multi-channel media to push each channel. And then it would be a combination of TCA links. So actually, remember, if you've met with them, whether it's on Zoom or in person, they know what a TCA is, they know what the link is. It would be some very lean, you know, like I'm not always trying to sell them. I'm just in a practical way, giving them the case study with a link. There would be some bomb videos. There would be some social media videos. There would be some text videos, and I would just be mixing it up. And it wouldn't be overwhelming. You know, it would be once a month that I would have this database of, you know, in today's market, it probably wouldn't be 700 CPAs and financial planners. It'd probably be 25, no more than 50 relationships that I was trying to manage. I don't think there's a loan officer in America that shouldn't have 12. Like, if you are a baller and you don't have 12 CPAs and financial planners and advisors, I think your practice is flawed. I think it's a must have in today's market.
I love that. And I think it's a great thing to have in a shifting market. And, you know, I always feel like the challenge is, right, I think your big number probably overwhelms some people. So I think going back to, hey, just have a dozen is great, because then you can call them and check in with them too, right? Then you can do the other things that I think are important in relationship building. Because I got to imagine you didn't actually talk to all of those folks necessarily on a frequent basis.
So in the book, in the Art of Referral, I actually called out they were silver, gold, partner, and platinum. And I remember silver was someone who referred business to me, but I hadn't necessarily closed it. So gold was, you've referred business and I've closed it. And then platinum, I can't remember what the number is. It's in the Art of Referral. But let's just say it was 3 to 6 transactions a year. So and then I had a team. So I didn't personally keep in touch with people that hadn't done business with me, because I think I had like 100 of them. So between all the volume I was doing, I think personally call my golds monthly, and I would try to meet with I'm making it up, read the book. I think I was meeting the golds quarterly, you know, like trying to have lunch with them or something. So, I mean, it's a lot of things that we teach you guys with realtors, you know, but, you know, I leveraged my team. But no, I was not calling and keeping in touch with 700 people. That was over the course of 10-ish years that I was a mortgage operator and a loan officer, and, you know, closing 300-ish loans a year. That was my process. And like I said, it's in this book. You can read it in an hour. I think you can read this. I don't know, Todd, how long of a read do you think that audio book or the Art of Referral is? About an hour?
It took me about 40 minutes to review it this morning, but I've read it before a couple of times. So, you know, probably take someone an hour the first time, because you're going to be wowed by the scripts. I mean, you really laid it out, and you said it earlier. It's still just as relevant today. I don't really think you need to change up the scripts. And I think just what we talked about adding Zoom in there, adding the iPad in there, those things are the changes you would make to modernize it to today.
Yeah, and I'm going to try to get my team to update it, because there are even the mortgage coach reports in there are dated. So, you know, Todd and I will talk about how we might redo the Art of Referral. We might even call it something else, but we'll think of some type of a deliverable that is just the ultimate playbook for how to get business for CPAs and financial planners. By the way, if you guys want it, why don't you, let's gauge interest. If you say, I want the Art of Referral updated or some version of that in social media, whether you're watching this on YouTube, whether you're watching this on Facebook, if you're watching this on Zoom, if we get enough people that want an updated version, then we'll make it a priority.
I put that on my call, my Dave section of my planner, where I have what I want to ask Dave about next time we talk. It's actually, I wrote on their updated version. So great minds think alike.
We already have JP Dennis, who said, yes, I'd absolutely love an updated version.
So we got a great question there, Deb. So, you want to read up Jeremy's question?
Yes. So Jeremy Baxter, which I love Jeremy. He's such a student of this channel. So he has a question that says, I have 2 financial advisors and 1 CPA that I work with. We've identified what type of client to refer to them, but I'm struggling on how to communicate which clients of theirs they can refer to me, and helping them understand how I can help them generate business from current database.
So Jeremy, so on the CPA, it's every client. Like the goal with him or her is that they are referring people for mortgage reviews or mortgage audits or move up analysis, refi analysis, debt optimization. So they meet with their clients at least once a year, and they should be getting after it. Financial planners are a little different in the fact that, first of all, every financial planner is a little different. There's fee planners, there's commission planners, there's life insurance agents that say they're financial planners. So, it depends on their model. It depends on how they roll. They're a little different, but my message to you in answering this question, Jeremy, is all of their clients should be referred to you, and it's up to you to educate them over time. That's the other thing. It's a long game. Like realtors, it's really straightforward. They all help people sell homes and buy homes. They got 2 things that they do, and if they're working with a buyer, they need to get a pre-qual, and if they're working with the seller, it's X. Whereas with financial planners, it's different. It's playing the long game. But your goal is for both those CPAs and both those, or that 1 CPA and those financial planners, to realize that the liability in the mortgage is a very important strategic financial planning decision, and that it's the most mismanaged financial planning decision in America, and that you are uniquely qualified to help all of their families pick the smartest loan with the most transparency, so that they want to refer all your clients. So that's going to take case studies, getting them the case studies, making sure if it's a 3-minute video with the TCA, making sure that they watch the 3-minute video and they got the TCA. And again, they won't read all your emails. They won't look at all your case studies. That's why you got to email it, text them, call them, and you just got to hit them with multi-channels over the course of 6 months to a year. And that was kind of my process. Like, get a meeting with someone, get them to say, I'll refer business with you. If they're cool, they're in my database, I'm following up with them, and I'm hitting them with case studies until they refer. And then I'm like, okay, that's a customer. And then just keep that process going. Hopefully that helps, Jeremy.
Hey, Dave, is there any information that you feel is critical? Like you mentioned, there's different types of financial advisors, right? We got insurance agents who are selling life insurance products. You've got, fee-based financial advisors. You've got, commission-based financial advisors. You've got fiduciaries. Is that something you think is important for someone to understand prior to making those calls?
Well, first of all, it should not stop you from making the calls and having the meetings, because that's how you learn. You learn on the job. So I do not want anybody to let, paralysis by analysis take place here. I'll give you a couple of shortcuts. And by the way, Todd Bellinger, him and I did a call recently. It's somewhere in that play channel where he gets into details on that. Also, becoming a certified liability advisor is a really smart thing to do through Todd Bellinger's certified liability advisor training. He teaches you a lot of that. So I would go through that if I were y'all. But I don't know, Deb, if you have a link to it or not, but we'll get you a link down below.
There's a code to save $100 or something, right? Or no, even more than that. There's a code to save some money on it.
Yeah. So myself or Deborah will get that for you. So, but the answer is this: you want to know what their motive is. CPAs are really straightforward. They get paid by the hour or by the tax return. They're fee based. So you really gotta get them to believe that you are in their client's best interest. And most financial planners get paid commissions off the amount of money that they have. So their motive is not having families cash out of their assets, and not having having families invest more money. But remember, guys, their clients are the lifeblood of their business. So one of their biggest concerns is don't screw it up. Like if you screw up or don't execute well and it gives them a black eye, they're very concerned about that. So again, you don't got to overplay it. I think it's just like, if you show up like, I have extraordinary knowledge and I have your client's best interest in mind, you solved that problem. So I would just say, know how they get paid, and then tailor your advice accordingly, and then give them lots of case studies so that they know that you have consumers' best interest in mind. And you've demonstrated that because you're showing options, cost over time, and you're showing strategies that help families build wealth with real estate and through liability management. And so that's the key with all of them, but they all have some nuances to them.
Yeah, I've got a great example of that. I had a Merrill Lynch advisor, and a lot of you know that Merrill Lynch is part of the Bank of America family. And what was interesting is that, again, you have to know their motives. And so they're kind of, like whether in the President's Club or any of that stuff is based on assets under management. And one of the things that they did was they made it so if they got $1 million mortgage that they referred over to Bank of America, that actually counts underneath their assets under management. And so they've incented them through their reward system to refer internally. And they also give them, a kickback of some kind of a referral fee as well. But what I found is that the best advisors there actually referred me their clients because they didn't trust the Bank of America loan officer to do a good job. So sorry if any of you work for Bank of America, but they didn't. So I would get all of those clients from them, the ones, because in the end, he didn't want to lose a client over the fact that he referred the mortgage internally and it didn't work out. And so oftentimes they're more motivated to keep the client happy than they are for their own income. But certainly a lot of the big brands out there that have affiliations with banks are going to be a harder play for you. I would personally go after, and my team works independent, wealth advisors.
Yeah. And by the way, most advisors care a lot more about their client and the mortgage, even if they have a mortgage. And they did, Merrill Lynch. I had a lot of Merrill Lynch advisors. That was kind of early in Merrill Lynch having a mortgage program. But I would always just like, hey, let me put an analysis together. And, and I would even include, their product in it. And most financial planners and CPAs, they really care. They're not product. They are product salespeople, but they are advisors that are playing the long game with families. So if you just come across as an advisor and I'm here to deliver a service, that service is called total cost analysis. And that service is always looking out for your client's best interest and helping them make smart mortgage decisions. You'll win. And by the way, when you lose, good. You were meant to lose that. There's enough people that will do business your way that I wouldn't worry about it.
I love that you say it that way. I think it's a little overwhelming for new loan officers, but I would tell you, as someone who started off as a stay-at-home dad, getting my MBA at night, the mortgage coach analysis was my differentiator. No one else in the office used it. I paid my own money to get it, and they actually bought a license that for the owners of the company, and none of them ever used their license. And so remember, you've got a unique tool with Mortgage Coach that most of your competition doesn't have. And that's really what your differentiators. If you can help them understand their mortgage better, the total cost over time, in addition to the things that everyone else is telling them, the rate payment and cash to close, it's going to be kind of your silver bullet. And I still believe that when you're reaching out to these financial advisors and CPAs that they've never heard of it. And if they have, hey, more power to them. I'm still going after that person. There's no reason to hold back because they're already an educated person. Now you get to show them why you're more educated than the other mortgage coach that they got that from. Hope that was okay to say. Go after the competition.
Okay. So I have a funny story I got to tell y'all, because Dave, I don't know how I didn't realize you weren't tied to this, but you have another handbook, the Mortgage Coach Annual Mortgage Review Handbook from 2006. I just looked in my photo album. So this says, I saved several images on July 6, 2018 of all these different pages, because I remember I was searching. This is right when I was building, my business now, but it was a side business then. And as I was building it up, I remember searching for mortgage strategies, just that term, and trying to learn and up my game on maybe other things I hadn't thought of with mortgage planning, not just loan officer or mortgage banker. And lo and behold, I have all of these in this saved album that I really think, like in this playbook that you have here, you talk about the quarterly credit review, which I think goes hand in hand with Borrower Smart University, that certified liability advisor. And you have in-depth strategies of what all can come from, I think it was you and Kai McBride, looks like, of when you're doing
Kai actually came up with that credit review. I, created the whole framework, and I call it the Mortgage Planner Compass. By the way, guys, it's free. You can download it from my my LinkedIn profile. There's a link to it. You could Google it. I think it's on our support page. It's in our Facebook group. So if you're in the Mortgage Coach Facebook group, go to files. And I mean, it's like an 80-page document. I mean, I'm actually really proud of that. I put a tremendous amount of work into that. Had help from my team, so it's not like I just wrote the whole thing all by myself. A lot of the images are dated, but the concepts are just as relevant today. And you want to be a mortgage coach and you want to be an advisor. The Art of Referral is totally focused on winning relationships and optimizing referrals from advisors. And the Mortgage Planner Handbook is just how to be a planner. How to go about things and be a mortgage coach versus a fee worksheet loan officer. That's funny though. So you really downloaded that, or you had that? And
I have it in my album. So, in my photo section, because I was looking for creative ideas for content creation. And I don't like anything vanilla, like you guys know. I don't want anything that everybody else is using, or if it's not a true mortgage strategy or something educational. So I will save different things and put them in a certain album to go back to reference. And it says July 6th, 2018 is when I have all these different screenshots.
Okay.
So listen, I paid $100 for your other book back in the day, Dave. So I kind of,
and that was paper. That was.
But can I just say, this is the power of social media. When your focus and your motive is about creating educational content, that you never know when it could be, 5 years later that somebody lands on it and it teaches them something that they wouldn't have known prior to. And then look at the domino effect. Like now I'm able to take some of that knowledge that I learned then from you, Dave, way back then, and multiply it through all these vessels of these loan advisors, and think about all the families that are now seeing content that stems from this learning.
It's pretty cool. Yeah, no, and I think I had 1,000 of them printed, and I don't know how many of them we sold for $100, but that was the price because I wanted it to be a really high value. Like, you want to be a badass, you got to pay for it. And I would say that for sure, over 900 we sold for $100, and I did give a few out to friends, and I think at events, when I would speak and tell the mortgage coach story, if you buy Mortgage Coach today, we'll give you this $100 book. But you guys can have it for free. It's a PDF now. Check it out.
All right, Dave. So we're at the tail end of the call. So normally I'm the guy who gives the action plan and kind of puts a bow on things. How do you want to sum up this call? What are the calls of actions to our audience?
Well, so first of all, if you want to go after this channel, write down your why. Get clear on why do I want to do it personally. Do a real assessment as to where you're at in your journey as an advisor. When you tell a family, my advice has value. Remember, we're not talking about transactional value. Knowing the experience to apply for a loan, solve the problems of a loan, close loans on times. That is a loan officer. But to be able to I can look at the credit report, I can look at your balance sheet, I can look at your goals, and then I can map out a strategy that will help you build wealth with real estate. And I can deliver it to you visually in a very compelling way with a total cost analysis. Where are you at? Are you a brown belt? You a black belt? Are you, where are you at? And you got to get there from the inside out. In the meantime, if you want this channel, just don't be afraid, make calls. I don't care if you're new in the business, call a CPA, call a financial planner, learn how they act, learn how they roll. But, I just close it with do it. But if you really want to win with this strategy and you want to do it well, you need to do it from the inside out if you want to have that mindset.
I just love that. I think it's a refreshing view when we've been talking about real estate agents all year to have this other opportunity for you to focus on. Again, it's a multi-channel, as Dave said. So I'm still going after real estate agents, but I'm going to go after CPAs and financial advisors as well. So whatever the ratio is that you want, do you have a suggested ratio, Dave? Call 5 realtors, call three CPAs and 2 financial advisors, or?
No, because I think it's all prescriptive based off of who your personal DNA. Like I said, I did love numbers. I did come from a family of CPAs and financial planners, so it really aligned with my DNA. But if you're more of the like Jeremy Forcier, who is just a realtor calling animal, and he loves it and he gets energy from it, I'm still gonna tell Jeremy, and he is building some CPA financial planner relationships, but figure out what's right for your practice. Listen to that call I did with Wally. I really like the way Wally Littleberry approached it, where he decided to go after a specific type of financial planner, and he became an expert with that, and he scaled a whole program around that. But he did it because it was right for him. It was, and he had some people that he knew at I can't remember the company that he focused on. Oh, Northwestern Mutual. He had a Northwestern Mutual agent. He really learned what they did. He got a lot of referrals from them, and he went after that. So tailor it around your personality and your opportunities.
All right. Well, we are 1 minute past the hour. I appreciate all of you for taking the time to watch this. You all knew that Dave Savage was amazing, but now you all know he is the OG of going after CPA and financial advisors. I know my business was built because of Mortgage Coach. And I know that most of your businesses here have been at least maybe not built by it, but had tremendous value added. So I would just say thank you, Dave, from all of us, and appreciate you spending the time today to actually tell your story. I think that's a huge help to us. And we look forward to seeing you all next week on our next call on Tuesday.
Thank you, brother. Look forward to it. Guys, Scriptapalooza is coming soon. It is March 8th, Tuesday. I do believe you can go to our website and our calendar and sign up for that. We'll be announcing who the speakers are, maybe next week, for sure the following week, but we're going to try to get some marketing out. We're still trying to confirm some speakers. If you know someone that you think would be a great speaker at that, let us know. But just know that is coming soon. Take care, everybody. Thank you, Deborah. Thank you, Todd.
Bye.
All right, you guys rock.